why don't we just walk through the specifics here? So Highlander Foods Inc., the symbol is HLF on the TSX exchange, trades at a price of about $12 per share, $400 million market cap with 33 million shares outstanding. And what they are a leading North American processor and marketer of value-added frozen seafood. So the retail branded products, which are the ones that Ryan and I were so fond of when we were young, are sold throughout the United States and Canada under the Highlander, Fisher Boy, Mirabelle, Sea Cuisine, and Catch of the Day labels. And they're available in most grocery and club stores. So I see them when I go to Costco. I see them when I go to the superstore. The company also sells branded products under the Highlander, Icelandic Food, Mirabelle, and FPI labels to restaurants and institutions. So more or less kind of almost a wholesale segment. They're also a major supplier of private label value-added frozen seafood products to North American food retailers and food service distributors. So they have wide distribution chains through their business, diversified product offering as well. But essentially what you're getting here, frozen fish sticks. That's the ultimate thing that you're getting. So we'll just take a look. Where's the stock price been over the last 12 months? Pretty flat with a lot of volatility. Stock price hasn't really gone much of anywhere. And that's the same as really what we've seen over the last 10 years. If you go back about a decade, we're seeing a lot of ups and downs in the share price. We're not seeing any sustained growth from the business, at least not in its stock market. Now, when we recommended the company, this was previous to 10 years ago. It was about 2011. We sold out about 2012, 2013. We made a pretty nice return at the time. And what we were seeing was a rather unknown company in the stock market that had just made a major acquisition, had a lot of embedded growth, and was trading at a low valuation. So that was a great deal. And when we sold out is really because the valuation started getting ahead of itself. Also, the financial performance started to slow down. So let's take a look. As I said, we've been looking in on the stock every couple of quarters over the past decade or more, and I'll talk a little bit about some of my observations there. But first of all, let's just take a look at what the recent performance looks like. So Q2 2023 results, they were pretty much flat. Sales volume of 59.4 million pounds of fish, up 1% year over year. Revenues of 254 million. Basically flat year over year. The company did see a drop in their gross profit margin to 20.4% from 22.2% in Q2 of last year. So that's a 180 basis point drop. Adjusted EBITDA down 13% to 22 million, and then adjusted EPS basically flat. So if you look at the 6-month numbers, a little bit more growthy, but really not that impressive either. 3.3% sales volume growth, 6% revenue growth. Margins, gross profit margins still down compared to the previous year. Adjusted EBITDA flat, and then adjusted earnings per share up about 7%. Some of the key takeaways from the Q2 results were that softer demand and higher inventory levels in the retail segment of the business is really what had a negative impact on profitability. The food service segment does continue to perform well, and it just completed its 9th consecutive quarter of growth. What the company's looking at doing, which is really continuously the story, it's what they're always looking at doing, is investing in innovation, targeted promotions, and marketing. And also exploring opportunities for transformative growth through potential M&A or acquisition activities. And they have been somewhat successful in that regard over time, but it's not a consistent generator of growth. Usually significant acquisitions are years apart, or else they're smaller, really bolt on, and don't necessarily move the needle. Looking at the balance sheet, total debt of 340 million. Equity of 387 million. So on a debt to equity basis, just under 1, reasonably good. And then debt to EBITDA based on trailing 12-month adjusted EBITDA of $103 million. You're looking at a debt to EBITDA multiple of 3.7 times. So I think this is a little on the leverage side, given that the company does at the very least produce sustainable profitability. I don't think that the balance sheet is severely over leveraged, but I don't think that there's a lot of space for more leverage here. I would really like to see this multiple down at 3 times or even a little bit less than three. And then in terms of valuation, if we were to just base this off of the trailing 12-month earnings per share, adjusted earnings per share of $1.53, we'd be looking at a price to earnings multiple of 8 times. Now, usually what I like to do is I also like to throw in some analyst estimates into here so we can get an idea of what the forecasted earnings are for the current year and for next year. Problem is High Liner doesn't really have a lot of analyst coverage. From what I can see, there's 2 analysts covering the company. That doesn't really give a lot of credibility to the estimates. But generally speaking, what we would be expecting would be to see a slight decline in earnings in 2023, and that's more or less in line with what we see with the Q2 results. So flat to slightly lower earnings in 2023, maybe potentially a little bit of growth in 2024, but we'd have to get into the year to see that. 8 times earnings, that's an attractive valuation. Certainly it's a discount to the market. It begs the question, is this a value opportunity? So I'm going to answer that. What is our take on High Liner? And really, I think it's an interesting company. It has that recognizable brand, diversified product offering. Its products again are widely distributed, and the valuation is low relative to earnings, making it that potential value opportunity. And what you would want to see here from a value opportunity is that valuation multiple to expand. So right now we're at a fairly sizable discount to the market, 8 times earnings for a company that is still relatively healthy, if not much of a growth stock, but 8 times earnings. And you'd want that valuation either the earnings would grow and the valuation would stay the same, and that's what would create the share price growth, or the valuation multiple would expand maybe from 8 to 10 times, which either with flat earnings or growing earnings would again be positive for the share price. The question is that going to happen? Can we make a reasonable assumption over the next 1 to 2 years that either the earnings are going to grow meaningfully or the valuation multiple is going to expand meaningfully? And I would argue that at this point we really cannot. The reasons for that is, one, they've really been unable to maintain consistent earnings growth or just consistent growth in revenue over time. And as I'd said, we've been looking in on this company every couple of quarters for more than a decade since we got out of it. And really, they're never able to build sustained momentum in their financial performance. They'll come out with a couple of good quarters, then they'll come out with some poor quarters, and they're really just up and down. And we've seen this in the share price. I mean, the share price has really reflected what's been going on with the financials. One of the things that they have lacked in the past that has really been a challenge for them is passing on higher costs to consumers, so increasing prices. Now, they were able to do that last year in the highly inflationary environment, which is good, but historically they've had trouble with it. Last year might have been a bit of an anomaly given that everybody was increasing prices, but I have noticed them lack pricing power. The balance sheet again is okay, but we would consider it fully leveraged. I mean, it's not a situation where, they're looking to do M&A or acquisition activity. It's not a situation where they have this underleveraged balance sheet and a ton of cash, and we think like, oh, they have the capital structure to go out and deploy that and do a big deal and bring it in. They're already pretty fully leveraged. So could they add a little more debt on? Sure. I guess it would just depend on the deal. But, really, I don't see, I can't make an argument at this point in time that the valuation multiple is going to expand. It may expand just with overall market investor sentiment, but that's really risky to try and predict that. Earnings, as I said, they may go up. The analyst expectations off of the 2 analyst forecasts is that there'll be a little bit of growth in 2024, but I mean, that's really uncertain right now. We can't say. So I think that probably the stock is appropriately priced from what we can see. Now, if they're able to do anything like a good acquisition deal or string together, several quarters of consistent growth, even if it's a moderate level of growth, then at that point we can see the valuation multiple expand. But I can't make a strong argument that that's going to happen over the next 1 to 2 or 1 to 3 years. So we're not buying it right now. We're going to continue to follow it. It's an interesting business, And what we want to see is we want to see it demonstrate a track record of being able to grow consistently on the organic revenue line and also on the earnings line, earnings per share line as well. And that's that.
Yeah. And Brennan said he has that man in his freezer, so
I
you should
thought so,
probably
but
check your freezer and get him the hell out of
it
there.
was actually
Because
Jane's. I had to, well,
No,
be
I
honest,
mean,
dude.
I've got Highliner in my freezer.
did you just
Unless
go
we've already
check?
eaten it, but
I went and
I don't
checked.
need to check.
I went and checked. Yeah. So it's Jane's. And I will say, just like anecdotally, from like a consumer perspective, like I've walked down, the frozen like fish aisle and have seen, a box of fish now, $25 or something along those lines. And it's like, I will push that off. I don't need to buy fish right now, even though, I like that in my diet. It's healthy for you. Get those omegas, as my mother has taught me. But, I just I wonder if that'll impact it. And then as well, I was just looking at like the processed foods and feeds producer price index for fresh fish and seafood, and we're basically tapping off of 10-year highs basically, and it has been doing that since July of 2022. So as we've seen some commodity prices come down, I don't know if fish has it might still remain a little bit elevated right here.
You're worried about the captain. That's good.